Good afternoon, traders. This is Christian from your Trade Group, and this is your end of day and end of week market recap for Friday, January 10th. And a lot of red on the screen once again. So I will go over some of that price action with you today and a few of the single names. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer right there. So we had the so where to start with this nasty price action. So we'll start with the economics for the day. I did that on Friday's video as well, and we'll start there as well. But we had the jobs numbers today, and quite honestly, I don't really understand why that this is like such an impactful report because I think it's just kind of like it's an average report. I don't here's the part that here's the part that I don't understand why the expectations were so low for this jobs report, right? So they were only looking for 165K on the non-farm payrolls, private payrolls 140K, which again, that's like pretty light. And there's been a couple things for me like lately that I don't understand where they're getting these expectations from. And that's been the case for like interest rate cuts and so forth too. I don't really understand why the market has been pricing in, that we were going to basically get interest rate cuts. That hasn't made sense for me either, and the market is reconciling that now with Fed fund futures. But it's the same thing. I think I looked at this kind of coming into today, and I'm like, I don't know why these expectations are so low, because 256K and 223K, like to me, that's kind of like an average. That's a decent report, but it just feels like the market wanted to go lower, regardless. And as soon as we saw that number come out, yield spiked higher, the dollar spiked higher, and it's very difficult to kind of come back from that. We did see a little bit of a bounce during the lowest volume part of the day, around lunchtime, 12 to 2 o'clock. We saw a little bit of a bounce, but this market for now just seems like it wants to go it wants to go lower for now. And we kind of hung out there. We can kind of look at the S&P here for a minute, but you could see so we're now below the value area. We kind of toyed around with that for a little while, but we are below the value area for the month. It's a decent move down today, down 1.5%, I think. S&P futures were down a little bit less than that, but just looking at what SPY did for the day. The VIX is back up to around a 20, a little bit shy of that 1950. So, a couple of things that I talked about in the video on when was it? Wednesday. Again, these days off in the middle of the week kind of it's a little bit different to do that. So I'm confused always what day of the week it is now, but that's another story. But yeah, we're breaking below the value area. A couple things that we had talked about, just a set of lower highs, since we made this high back on in the middle of December, so that's been pretty simple to follow. So what the technicals are telling you, and I'm going to do this with the Qs too, what the technicals are telling you, as well as what the valuers are telling you, has been pretty straightforward. The series of lower highs coming in, right? The breaking of the value area, the breaking below 50-day moving average. It all means weakness, right? And I don't want to go too much through breadth because for whatever reason, people get upset now when you talk about market breadth. I don't really understand why, because it's a simple concept. I give a Q&A session too on Fridays at 1 o'clock, and I was mentioning it too. And somebody said, well, it's an indicator. It's not really an indicator. It's basically just what is going the dynamics of the market, right? And it is what it is. It's just telling you what's going on under the hood. I don't think there's anything to argue about here. When the stocks were going up, I heard people saying, hey, make sure like you're counting how many names go up versus go down. I 100% agree with that, right? I mean, we had during multiple rallies in over the last couple of years, there were a lot more names going up versus going down. Now, there was this whole concept of like, how much the bigger names were affecting the market. That's something different, right? Because people were trying to emphasize that it's only 5 stocks or it's only 7 stocks. Well, in a market cap weighted index, that's how it basically works. The larger companies can really pull the market because they are bigger weights. So the bigger weights affect the market. That's math. And it's the same thing with market breadth. It's just math, right? So you're looking at, for instance, today, which has been this is how we've been going. 38% of the S&P made a new low today versus 7% made a new high. This is 4-week highs, but I did this for you on Wednesday too, but this should tell you something, right? This is not good. And I don't care like if you don't understand breadth or if you don't understand 1 + 1 = 2. That's a whole nother thing. Like maybe you need to take a math class if it doesn't make sense for you. But this is very simple, right? And it's the same thing, by the way, I tend to look at 4 weeks because I am like a medium term swing trader, right? And I want to get the signals faster than looking at the 52-week highs. But right, it's the same thing when you look at the 52-week highs to some extent, right? Today you had 7 so again, to a lesser extent, you had 7% of the index making a new low today. You only had 1% making a new high. But what I'm getting at is, take a look, right? Since we made these highs back in here, there's been hardly any new 52-week highs. So and there's been a pickup in 52-week lows, more so than any other time in the year of last year. So if this isn't like slapping you in the face saying something is different, then I don't know what is. Like I don't know what's supposed to surprise, like what is not supposed to surprise you, because it should be slapping you in the face saying this is much different than any other time that we've seen over the last year. Right? It is pretty ugly when you look under the hood. All right. And the word that I'm trying to I'm trying to think of the right word that I'm looking for. Yes, and the word that I use all the time to describe this is when we have a situation like this, it's deterioration, right? There's a lot more names that are breaking down versus up. So that's it. I'm not going to go over anymore, but I really don't understand why people are having a hard time with this concept. It's a very easy concept. Now, you could look at your leaders, and because I understand, because some people are like, oh, well, as long as the leaders are acting well, but I don't think you're seeing as many leaders also. Like you could do that thing, you could do that too. Like normally people have like a watch list with 10 or 15 names on it. There are some names that are holding in there. Yes. And I'll go through a couple of those, but it's not as many as it was a couple weeks ago, right? And also this market is changing very quickly. If you go back to where we were last Friday, right? Everybody was like, "Oh my God, I'm seeing so many setups, and this market's gonna like, it's gonna be very difficult for this market to not go higher because of all the setups I'm seeing in growth stocks." Remember that? That was, that feels like a long time ago, right? That was when we were here, right? So again, we had this nice turn, follow through, and then we did not close on the highs, and that's it. Since then, we've been kind of marching lower here. So, is this so? Again, I'm not trying to be so negative. I'm just trying to make sure everyone understands, because breadth it's a simple concept. It's just telling you how many stocks are going up versus going down. And so before I go away from this S&P, because I don't want to be super negative here, one of the things that I've said a couple times now in these end of day videos is I think it's okay for the market to kind of come in here ahead of all the big names that are reporting earnings. And the reason why is um, it'll be better setups for names that are reporting earnings, because if the breadth continues to be pretty nasty and the market hangs in there, I think you're just going to have a hard time. Like names are going to probably report, if they report good earnings, they're going to have a tough time holding those gains. Take a look at, like, so for example, Delta. Delta's fine. That's a big move. It's a 9% move, but it didn't close anywhere near the highs of the session. So you're going to find that the stronger the market is, both in the price action that you're seeing and under the hood in the participation, the more that you're going to see breakouts work. The weaker the market is, you're going to see a lot of breakouts fail, and that's my concern as well. So I want to make sure that once we get to the heart of earnings season, that the volatile, like we've been pretty, I hope that we get to the point where we're washed out, right? So there's some strategy involved here. You don't washed out too when the market's getting washed out, right? You want to have dry powder, because where I would see if this is going to be a head and shoulders, left shoulder, head shoulder, right, maybe two right shoulders and a break. If we break here, it's about 3.3% down until we get to my, major support, which is what I would be looking here. And that's the top of the value area for the year. That's my support level. I don't know if we're going to hold it when we get down there, but to me, that's a very relevant, significant level to watch because that's based on all the volume and the price action from last year, right? Same thing with the Qs, right? Let's do this exercise for the Qs. Now, I mentioned just a few minutes ago that the technicals have been giving you some great signals. What signals am I referring to? Well, lower highs. Here's your high that we saw December 16th. I tweeted this out when I saw it. I'm like, hey, that's a lower high, right? That's usually not a good technical. It's usually, you know, a hint that something's not right with the market when you come up and try to make another attempt and you fail and you come back down. Remember, we were oversold down here, right? So we came back in here at the 50-day moving average. Look at where we failed, right at the top of the value area for the month, right? So again, this is pretty straightforward. Like, you know, if you're using some of the tools that I'm using, but here's where we were in the beginning of the week. We failed literally right at the top of the value area. And again, these are all drawn for you, and you know this if you're using this indicator. But here's where we are. Here's where we fell apart, kind of hung in here, and then we spilled lower. Now, where we are now, I don't know. So we have taken out a virgin point of control to the downside. We did bounce there a little bit on this takeout. I don't know if we're kind of stuck in the middle, right? So I can't really make a determination here because we're now below the 50-day moving average, right? We're below the value area for the month, but we're above this VPOC. So we're in a holding area for now. If we break this, then I begin to kind of look down here, and we've got about 4% down to get to your major support. So what I'm watching for Monday is whether we hold this like 503.75 level. IWM, a mess. And I continue to hear people talk. Well, I haven't heard people talk as much bullish about it lately, but this is your underperforming area and not anything where I really want to be in, especially when yields are going higher and the dollar is going stronger. Also, what did I say on Wednesday? I said that the IWM can really move on economics. Case in point today, down 2.2%. IWM, look at the gaps all over the place. It really responds to the economic report. So if you ever hear that, right? Well, some of these things that I hear on Twitter or wherever, it makes me go wild in terms of, but people are like, oh, I don't care what economics do. Well, if you're trading IWM, you absolutely need to know you need to know where the economic reports are, because every time you see one of these big gaps, it either has to do with some event like the election or like a CPI report or a jobs report. It gaps all over the place on economic reports. Big moves that IWM makes. And it's different than the other indices. It really, really moves. And so you're welcome to slap somebody who says that the market doesn't care about economic reports, because IWM certainly does, as well as events and as well as Fed meetings. All right. Speaking of which, what do we have next week for economics? Because we had a decent week in terms of quantity of economics. It's the same thing for next week. For whatever reason, you're going to get the PPI first, right? That's on the 14th of the month. So 11, 12. So that's Tuesday. And then Wednesday, you're going to get the CPI report. Now, they are looking for high numbers. So just like the jobs report today had a low expectations, and it was easy for a number to come in higher than expectations, this is a little bit better. So, maybe we might be oversold enough into next week to get a bounce. But how would I be playing a bounce at this point? I would be selling that rip, because I think that that's the market that we're in right now, is to sell bounces and sell rips, right? Until we see better participation and the institute. By the way, all this conversation with breadth and so forth, it's really to kind of help you understand if the institutions are in there supporting the market. Remember, at the end of the day, these are the big boys and girls who are doing all the buying and selling. If they're not involved in the market, you kind of see what we're getting, right? You're not getting very good price action. You're not getting very good participation. So if these numbers come in a bit lighter than expected, like, could you imagine if like the CPI report comes in 0.1% next week? What do you think the IWM is going to do, right? As well as some other areas of the market, they're going to gap back up, right? So, it's important to kind of understand how this moves. And, what you can basically do to kind of position yourself. So that's what we've got for next week. We also have a retail sales report that's coming. By the way, so it was not, as we could talk a little bit about some stocks. I mean, this was pretty amazing, this Constellation Energy. I'm not in this name. I did play this in here, but I sold at the VPOC. It's very rare where you see the name that's doing the acquiring um, have a reaction like this, but the street really liked this. Also, VST looks very good. So again, there are some names. So you could say like, okay, the leaders, depending on what you call the leaders, there are some names that are really holding in there. GEV did a good job, right? So again, a lot of these are power, have something to do with power and energy, but GEV was still long this name because there was no reason to really sell it. Now I had to cut some other names because they're just deteriorating. Right. I was long some NVIDIA. And again, I don't mind going over this stuff because I want people to learn. And you have to realize too that you're not going to you're certainly in this environment, you have a tendency that with more stocks going down versus going up, you're going to have more of a difficult time in here. It just is what it is. That's what breadth is telling us. But I got out of this because my stop was at the 50-day moving average and it's back in a range. So that was my stop on the trade. I'm out of it. Also, I'm out of the semis. Again, I was looking for the semis to break out. They're not breaking out anymore. Maybe they're showing relative strength to everything else. Maybe a little bit, but overall, sorry, let me just pause this. But overall, this does not look great either. We'll see how it shakes out. I mean, it's good to see something not break down. We know that energy stocks have been very strong, right? And here's the performance. Here's the performance for the last 5 days, just to give you a sense of like what's been working. It's been energy stocks. Even though energy stocks, if you look at today's performance, they gave back the early gains. Um, Oil services were down just a little bit. They kind of just caught up to everything else to the downside. Clean energy was down, uranium was down. A lot of these were your biggest sell-off names after the open. What did well today? Retail. Costco had good sales. We can kind of look at where Costco is. It didn't close on the highs, but not a lot of stocks up 1% today, so it did a good job. Also, Walmart did a good job today, holding inside value. BJ Wholesalers, which we were talking about this name today, I view Costco as a better name, but overall, overall, I view that that this name is cheaper too. So when you look at the PE of BJ's Wholesaler, it's like 22, which is like half that of Costco. So it could be why that this rallied a little bit more. So just a few other names that I was going to go over is Oklo. Again, kind of coming in here, but not falling apart, still retracing those big moves. So again, it's important, even though this market is not acting very well, it's important to understand what's holding up well and what's holding and what's not because you basically want to have a watch list as the market improve, as the overall dynamics of the market improve. You want to be able to kind of go back to that watch list. All right, guys, I'm going to end it here for the video for the end of the day. Have a great weekend, and I'll see you back on Monday.